Gerard, yeah, I mean, listen, higher rates, good, but if you're not doing deals, if M&A it gets cut off or slows down or shuts down and trading slows down, what's the balance for the big banks?
Brian, it's a really good question. And the numbers, obviously, in investment banking, which are pretty dramatic, as you just described, really no surprise since, I would say, the spring of this year. And the reason being, of course, is the Fed is raising rates, as you pointed out. So when it comes to banking, there's two parts, as you know. There's the fee part, which is driven by investment banking. But more importantly, there's the spreads. It's the lending. It's the deposit gathering. And for 15 years, banks have had to suffer with low rates. So the banks that take in deposits and make loans are seeing very strong revenue growth. Unfortunately, it's negatively impacting the investment banks, as you just described.
Sounds like you're just saying we should own boring old actual banks. I don't mean Wall Street banks like, oh, let's trade the Bitcoin. But I mean like, hey, give me your money. I'm going to put it in a checking account, give you a toaster, and then you can write a check.
Ryan, that's music to my ears. You're absolutely right. That is what we want. Boring is beautiful. We're not talking tech stocks, as you know, and that would be derogatory for a tech stock. For banks, that's a compliment. And I would say that taking in cheap deposits, those non-interest bearing deposits, because you have to remember, Brian, it's been 15 years since investors had to look at the right side of the balance sheet, meaning deposits. If the Fed takes the Fed funds rate to 4% by the end of the year or into next year, think about the spreads that the banks will earn on non-interest bearing deposits, such as checking accounts. It's pretty impressive.
Yeah, so who's doing it well, Gerard? What stocks are you recommending? Who's good at banking?
It's the regional banks, Brian. So when you take a look at names like Fifth Third or KeyCorp, both, of course, out of Ohio, then you also have M&T Bank up in Buffalo, New York. You also have Regions Financial down in Alabama. All PNC, Pennsylvania, another very good bank. All of these banks have very low-cost deposits. They make commercial loans that are tied to the Fed funds rate, and therefore the margins are going to improve. Not only did they improve in the second quarter, they're going to improve again in the third and fourth quarters of this year.
Wow. I mean, it's funny because you're talking about the banking capitals of America, Buffalo, Cincinnati, Birmingham, Alabama. What are they doing right? Maybe because they don't want to be fancy.
Brian, there's a lot to that. And when you think about it, when you think about the financial markets, that's affecting wealth management. It's affecting asset management and investment banking. And these traditional regional banks, they have some of that, but that's not the dominant area that they're known for. They're known for lending. And they've been, struggling during the pandemic and growing loans. Loan growth has really picked up this year, as indicated by the H8 data, which is the Fed data on Fridays. So it's like you said, it's not the big urban markets like New York or Chicago, but it's these smaller markets that are doing quite well.
They are. You go, Buffalo. By the way, you go Bills. They're going to probably win the Super Bowl and just give a double win to Buffalo. They could use it, though. Gerard Cassidy, really appreciate you coming on. Thank you very much.